Good evening, everyone. First of all, welcome back to 2021. Let's hope that 2021 is vastly different and better to 2020 in every single way. I'm having a look at the major indices. I'm starting off here with the Dow. So first of all, daily in isolation, nice and bullish. We had a bit of a correction, which on the weekly, almost connected with moving averages. In itself, actually relatively bullish and a nice little bounce of 30,000. So it currently looks nice and bullish. The monthly is now starting to enter again into this higher risk distance away from the moving averages. Over time, it'll tend to drift further and further away, but right now it's certainly in that area. I just note that the MACD is dropping a little bit lower, but the RSI seems fine. Okay, so that isn't, I'd be more concerned if I saw both of them diverging. Not seeing too much of that. So this supports the idea that the market still has a bit of juice and can continue to climb higher. Then having a look at the S&P in isolation visually, this is beautiful, very nice and bullish on the daily. That weekly also looks really good. It's not that overextended. The monthly is the only one that is now problematic in terms of that. It does mean that at some point in the next few months, there's going to be a deeper correction on the monthly time frame. Looking again here, MACD is dropping lower and the RSI is fine. Okay, so basically again, this leans more bullish than bearish, and the signs of exhaustion or weakness aren't really there. So if there is going to be a correction, it's going to be a surprise correction as opposed to a normal, natural, healthy correction. Moving on to the NASDAQ. So the NASDAQ, showing just how bullish it is, this kind of retracement, which for me, where I've been talking for several months about this being severely overextended, it still is very much the case, but I do note the price did do a bit of a correction and has headed off. It's going parabolic, and actually it occurred to me that this could continue on for a couple of months and then have a much more shocking correction. We'll have to see how that goes. The daily in isolation actually looking really nice and bullish. Here, the MACD actually looking kind of flat, the RSI looking okay. There's not too much divergence there, and the weekly not looking that overextended. So summing it up by taking into account that the NASDAQ is kind of the most bullish of the bunch, all of this so far looks really more optimistic than pessimistic. I'm still going to be cautious. I know we're going to get a correction on the monthly time frame. Most people, especially sort of fundamental, the average kind of casual fundamental sort of slash trader will just listen and get a feel for the market, saying, look, it's so bullish now, how can it ever come back down? But the reality is that if you've been around trading for 10 years or more, you've seen it happen. You know the market always has to have that correction. It just becomes too top heavy, and eventually it has to have a bit of a correction. People take profits, people get scared, and then that's how it happens. It's never a rational thing anyway. And I think that's a mistake to think that those are fireworks going off in the background, by the way. I think it's a mistake to think that the market behaves in a rational fashion all of the time. That just simply isn't the case. So looking at the mini Russell 2000, that's bumped 2000. That's beautiful. I'm very glad to see that happen. It's now potentially at a point where it wants to do a weekly swing high and potentially come back down towards 1800 to find a bit of a base and then continuing its longer term uptrend. The monthly is certainly overextended, in my opinion. I'd love to see it come back to 1800 to 1600 as a nice healthy correction at some point, but it's likely to do that really when the rest of the previous indices that I've spoken about will do that. Then it's likely to fall in line with them. Moving on away from the US and heading east. Looking at the UK, the FTSE here struggling, bumping its head up against 6550. I'm again very, very happy to see that it has broken above 6300, which has been a real barrier historically, and seeing that we're above that now, that just means that in theory the door, the potential, the possibility of going up to 7400 is actually there. But look at that weekly, there's a lot of indecision here. It's struggling to get over the line. So we had a bullish candle the previous week, then a rejection candle this last week. And so therefore there's a battle going on, and this just means that compared to the US markets, if I'm a day trader, I think that it would be more prudent to stay away from the UK markets for the first couple of days until it gets back above that 6600 level, or conversely decides to break back below the 6300. But it's in purgatory at the moment. It's bullish above this level and bearish below that level. Looking at the DAX, so heading further east, going to Germany, broken up above 13,450. I'm very happy, and I'm really, really happy to see it kind of pushing through here. I don't think we're free just yet. Going and having a look at this monthly chart, I want us to get outside of this level of resistance historically, but I'm very glad to see that being the case, because I want to be optimistic about 2021. I want to continue to see that kind of growth. And also even here on the weekly, a nice little bullish rejection of the previous monthly support resistance levels, not being that overextended. Again, kind of supports the idea that there is room or energy for the markets to actually go higher, believe it or not. Then having a look at the monthly here, we've got a nice little uptrend on the French CAC. And I want us to get above, so in other words, on the FTSE and the DAX, we got sort of managed to break above previous significant monthly resistance levels. I want to see the same thing happen here, and we're not quite there yet, but I would say that the weekly has done a retracement, a nice little bullish candle back into the moving averages, and currently is above that monthly 5 level. And I think it qualifies to continue up, but it really has to just break through that daily resistance at 5.6. That's what I'd like it to do. So if it can produce a nice little bullish candle this week at that level at 5.520 and then push on from there, that makes the most sense to me, in line with the rest of what the other markets are doing. Moving, looking at the Euro stocks, bullish weekly retracement looks really nice and is now trying to just break above that 400 level. The monthly also looking good. Again, that's been a significant level. If we could break through that, then kind of the sky is the limit, so to speak. That daily as well, potentially coming back to do that. So I'll be looking this week to see how many of these will manage to break up and head higher. Then look at the Nikkei. The Nikkei obviously had a fantastic breakout, 24,000, continue on. It is now similar to the US indices heading into overextended territory. However, the fact that it was consolidated going all the way back to 2017 and has had a really good deeper correction. So let's take this in context. Let's go look at this on a quarterly basis to get a sense of it. You can see here it's kind of had a deeper retracement. Let's go a little bit further and have a look at a yearly basis here. There we go. Really nice yearly correction. Nice little bullish yearly candle. But I think the quarterly probably makes the most sense. It's now entering into an area where a bit of a correction makes the most sense, coming back down to 25,000, maybe 24,000 to test that for support. But overall, my point being is it's also relatively safe, aside from the correction that could happen at some point in the near future. Overall, I think the structure of this is relatively nice and healthy. Finishing up here on the S&P out of Australia. So here you can see that kind of there's a bit of a turning point happening here, a bit of a swing high on that weekly basis, meaning a bit of a pullback down towards 6.5, potentially down towards 6.4, 6.3. As a weekly retracement makes the most sense, but we still have a monthly uptrend here. That looks pretty cool. It's not really battling against any massively key sort of monthly resistance levels. So I think the probabilities lie that it'll be a weekly correction and then take another run at that level. And overall, out of all of them, it's the only one that looks kind of like it's experiencing a correction currently. Let's just take a quick look at Tesla, for example. So Tesla's still looking nice and bullish, very similar to the NASDAQ index itself. Excuse me. In isolation, daily looks good, but there is, I would say, close to some bearish divergence on the MACD and RSI. The weekly is certainly overextended, and that monthly has gone parabolic. So if history is anything to go by, and we have a correction, the correction on this is going to be at this point. And if you trade with Fibonacci levels, you know that you can get a 618 retracement. You could even potentially get a 786 retracement, for example. You can get a 50% retracement, and that would mean we'd start to head down towards kind of the 400 level here, back into the moving averages. And so if history is anything to go by, it means that the possibilities of Tesla having a correction down towards these levels does exist. It does exist. The question is kind of how likely is that at this point in time? So I'll be looking over the coming months. I'm going to be looking for signs of exhaustion, which would be small red candles, potentially, or indecision candles on that monthly time frame over the coming sessions. But for now, in isolation, the daily looks really good. Looking at Apple here, so Apple producing a weekly bearish candle off that resistance. So that's now a double tap. The daily looks fine in isolation. Daily looks nice and healthy. And it's just that it's trying to break. We still have an uptrend technically at this, but can we get past this 140 level? Look, definitely that bill is coming due, and I just want to be cautious about it. But on a much sort of shorter term time frame, time span, I guess is a better way of putting it, we could potentially do that. So what I'd like to see this week is if the markets generally are healthy, as are potentially Apple or Tesla, I'd like to see them break up above their local kind of previous highs, get them above that, get above 140, get that to potentially be disregarded, and obviously see that continue a little bit higher. And that's really what I'll be looking for, and that's pretty much it. So far, again, to kind of sum up, although I do anticipate a longer term correction on the monthly is coming due at some point in the next few months, at this point in time in isolation, those dailies and weeklies mostly look pretty good. It's just the monthlies that look a bit overextended. Thank you.